Hello everyone, welcome to Macro Cafe episode 20. I am your host, The Cowboy. This is Elliott Wave Cafe. Let's get started. Alright, we have lots to talk about. It is Saturday morning. I've prepared quite a few slides for you. We're going to take a look at the equities. We're going to take a look at the dollar. We'll see what's going on in the crypto land and some interesting charts. So let's get started. Before I do, go ahead and follow me on Twitter. This has been growing quite fast for the past couple of weeks in here. We already reached about 1,050 followers. From I think it was about 950 last week we've talked about. So we picked up quite a few. Thanks everybody for joining and follow me on there. All right, let's take a look a little bit at the Pro Trading Room. Just a quick plug. You can come and visit me. This is the link. This is my Pro Trading channel on Telegram. I have an offer which is for the month of November, connected to the Black Friday, but you can join it anytime for the month of November. There's a 25% off the yearly subscription, which comes in at about $29 a month. It's probably going to be the best money you'll spend in your trading, learning career. All right, let's keep going in here. We're going to take a look at the S&P 500. And you can see we have been climbing quite well since October 13th when we hit a low at about 34.91 in the spiders. And we're trading very close to $4,000 level. I think we climbed above them over during the US session on Friday and on the futures. But we have closed a pretty strong week and this markets continue to recover. This latest move in here was probably due to, a lot of bearish sentiment that we've had for, the past several months in here, combined with some decent data coming up from the CPI, combining with maybe some good news out of Ukraine and, with the Fed that's probably looking to slow down their rate increases in here. And the markets have been, on a rip since last month. So here we are about a month into it. And the question on everybody's mind is like, okay, do we have a low back in here? Are we ready to begin a new bull market, or is this just another correction in the ongoing trend? And that's what we're going to take a look next. So again, just a strong week. I'm expecting a little bit more, maybe follow through on the following week. We're coming up into some important swing highs near 4,100 and a little bit above. And we're starting to get into some resistance levels into the S&P 500. You also see on the weekly charts, the RSI, it sits at about 51. These are levels that are usually, you combine those RSI levels with resistance on price, and they tend to be, good levels for sell on a downtrending market when the RSI gets between 50 and 60. All right, let's continue to take a look at the count. So I have here my main primary interpretation of the S&P 500, which looks at it as a triple correction, starting here at about 48.18 all the way down to 34.90. We have a W, which is the first zigzag, the first zigzag of this entire decline. Then you have an X wave as a connector towards 46.37. You have a wave Y in an ABC. Then you have another connector wave in X back toward the top of the trend line at 43.25, and we sell off in an impulsive way in here, 1, 2, 3, 4, 5. There's a little bit of a debate in this decline here if it's corrective or impulsive. It kind of works both ways, but I'm going to stick with this interpretation for now in the S&P 500. In some of the other indices, it's a little bit different. And I'm going to look at this rally here as a B wave of an ongoing decline in a wave C of Z of a larger intermediate wave 2 near 3,200, between 34 and 3,200, where we have some important, 61.8 fib retracement of this entire wave 1. And that's what I think that the market will probably travel before this bear market is over. The level that is going to start to convince me that this market is probably, that this correction is probably complete, is going to be a move above this X wave, about 43.25. And if that happens, quite impulsively, and it has traction in here, then I think we can secure a wave 2 low at these lows and then look for further upside in here. There's a couple of variations. You could still, have a little bit of a flat in here in an ABC, but I'm not ready to talk about that just yet. So for right now, we're going to go with this idea that this is a wave A of the lows. followed by a B and a 1, 2, 3, 4, possibly again just a little bit more upside maybe in this move to complete wave C of wave B, and then should be followed by a pretty steep decline into this wave C. All right, the next slide is going to take a look at the NDX, which is a NASDAQ 100, again with a pretty aggressive move, at a pretty big bear market. I mean, look at what happened in 2020, during the COVID crash in here, and look at the size of this monster as we're coming from this highs. There's a little bit of a different interpretation on this, and I'll show you that in a second, but I wanted to pay attention to the lack of strength that this market has compared with what I've showed you before, even in the S&P 500. And we'll take a look at the Dow Jones soon as well. But this weekly candle is very strong. We closed at about 11,817. There could be a little bit more upside in here, but I'm looking at this as a corrective rally against the downtrending market, followed by the next wave of decline lower. The RSI is not yet above 50, so it's probably going to try to reach those levels, maybe with a little bit more upside. Then we're going to find resistance and start to fall apart one more time. If you look at the count in here, again, we're looking at it as a intermediate wave 1. We're working a wave 2 intermediate to the downside. The interesting thing here in the NASDAQ in this market is the fact that we have already hit 61.8 retracement of this entire advance in a wave 1, which sits at 10,589. We briefly penetrated those levels and we started to reverse. So the 618 fib, it's an important zone, strong reaction out of here, but I think the decline, it's counted as such in a wave A, in a 1, 2, 3, 4, 5. So the first zigzag, A as an impulse, B as a correction towards 15,265. Then we decline again in a 1, 2, 3, 4, and 5 for the wave C. This completes the first zigzag as a W. We're doing a connector wave in X. We're doing another impulsive decline in a wave A, down in B, up in B into the 618. This is 12,483. It looks like it's combining, those levels are combined with the downtrending line from the highs, and it could provide a pretty serious resistance and initiate the next larger decline into NDX. That's probably going to take us into this wave C of Y of 2. It might not be as big as in the S&P 500, but I still think there might be another leg lower. By the way this pattern looks, it doesn't look like it's complete. It wants to do a little bit more damage to the downside, maybe go below $10,000 level, and that's my story for now, and I'm going to stick with this until this X wave gets attacked towards 13,720, and then we can look possibly at a different count and at the possibility that this correction in here in the NDX was complete at the 10,000 right here below 10,589. So let's take a look at the Dow Jones. There's a little bit of even more interesting story in the Dow Jones, because it's been rallying. It had a huge rally of this $29,000 low. I mean, the divergence between this market and the rest is it's pretty impressive, and you can see that we're already approaching the highs back here from June, July, I think, when these were made towards 34,000. So, a very strong move. The RSI, it's still below 60 here. It's at about 57.79. But if we're cracking above 60, I think that this has the tendency to move back towards 70, and it's going to start to increase this uptrend in here. I'm expecting, obviously a little bit of a pullback. This is, a pretty strong move. I think it's going to get, no matter what, we're going to probably finish it off soon, and we're probably going to get either a second wave pullback or, I'll show you in a second here, the beginning of the next decline lower that will take us below 29,000. But, anyway, on the weekly time frame here, it's a pretty impressive, rally into, Dow Jones Industrials. Here is my main count. I'm looking at the top in a wave 1, same like in the other indices, intermediate, and working a wave 2 intermediate that has not been completed. 61.8 fib rests at about 25,371, and we've only gone to 28,660 on the low, so I think there is another low coming, and I'm looking at this decline as a leading diagonal in wave A. 1, 2, 3, 4, 5. I've had this as a triple correction, and I've kept thinking about it, and I don't really like is just because of the size of this move. So to continue to stay with this interpretation that this will revert lower into the 618, I have to rearrange the count into something that looks a little bit with better proportion and better better look. So leading diagonal in a wave A, followed by a flat in a wave B, in an ABC for A, WXY for a wave B. So just a 3-wave decline in here, 3-wave rally, followed by a 1, 2, 3, 4. If you can see in there, right, you have your wave 1, your wave 2, your wave 3, your wave 4, and you're working the final stages of a wave 5 advance of C of B, and this should be followed by a massive decline lower into Dow Jones below 2860 towards 25,371. Also, this matches with the distance that would be traveling in a wave 2 compared with this wave 1. If you're measuring wave 1 as a 61.8 distance, then you're looking at 38.2 for a wave 2, which would create 100% distance on the entire move between the origin of the wave 1 and the end of the wave 2, which is a kind of a standard procedure. So that would take us towards maybe February, March of next year, when this decline will probably end towards the bottom of this trend line. So that's kind of what I'm watching in here. This wave B can travel even above the wave A by a little bit. You can, right now you would have what it's called a running flat, because wave B traveled below the origin of the wave A. So we made a brief new low in here, but the wave B of this, the wave C of this flat has not yet passed the origin of the wave B, and that would qualify for a running flat. If wave C gets above 34,281 in here, that would be considered an expanded flat, a bearish expanded flat, and then would continue to go to the downside. So I think there's a little bit more to go, but I think we're in the final stages, and I would get ready for a decline. Now, I just want to remind you, in case the bull market is over and this whole thing was an A, B down in C, and I'm wrong in this interpretation, and this is a wave 1 from the beginning of a new bull market, then you would have to still get a decent correction in here, a decent 3-wave setback. That would be a wave 2, and then followed by a wave 3, 4, and 5. So in terms of a trading, that's kind of what you want to see. You want to see when either both the bullish and the bearish counts starts to align, and they're both pointing for lower prices ahead, either via correction or the beginning of a larger decline lower. But that's a very important tip that I tell my members all the time about this. That's when you find the best trade ideas, when the counts align and the subsequent move, it's in the same direction. So that was the Dow Jones Industrial. Let's take a look at gold, because gold has been in the light lately in here, right? It's pretty shiny. It had a pretty massive weekly rally in here. We closed at about 1769 on the gold futures in here, and there's a couple of interpretations that I have. I'm looking at the RSI. We're still in a decent bear market from these highs at 2075, I think it was. The RSI, it's barely getting above 50 in here. It would be a level where you would start to find some sellers. But the counts are a little bit interesting in here. So anyway, impressive week. It's coming into a big zone of supply. I mean, the gold, it spent many months, treading water between the 1750 to 1800 right there. And I think it's probably going to find some trouble trying to get through that level. Now, let's take a look at the counts. I got 2 of them. So one of them is the bearish one, which is my preferred interpretation. I have, plenty of explanations regarding this, where I talk to my members as well about why I think gold, it's going to continue to move to the downside in here. But just from in terms of a counting perspective, this is my preferred interpretation. 1, 2, 3, 4, and 5 for a wave 1, and then you have either a flat in here in a wave A. So you're moving up in a wave A, down in an A, triangle B, down in C for a B wave, followed by a sharp rally in C. This would complete the wave 2. So just like you saw before into Dow Jones Industrial, right? This is a flat that looks at it, with the wave B below this origin of the wave A. Then wave C gets very close to the wave A. This is a running flat for now. If we're sticking our head above this wave A, right, there will be an expanded flat, and it looks like this is a pretty impulsive lag, so we can count it as a C wave, and that would terminate wave 2, and then you would begin the next larger decline lower below 1500 towards 1400, and eventually we would find you know, some targets near $1,100 to $1,000 in gold in this after this entire bear market is over. The other alternate outlook is that that's a 1-2, and then this is a 1, and then you have a smaller flat in a wave 2. So instead of this whole thing being a flat, it's a 1-2 impulse in 1, and then A, B, C for B, and then up in C for a 2. So 1-2, 1-2, followed by a further decline. Now this wave 2 in here, because I know Elliott Wave Police is going to come after me in here, this wave 2 is a little bit bigger than wave 2 at a larger degree. This is not a rule. It's not something that, you know, it's got a lot of standing in the, I think, in the Elliott Wave literature in there, and it's just something that it's not really desired from the right loop perspective, but it happens more often than you think. And you know, I have plenty of examples that show that type of behavior. When wave 2 at a larger degree, it's smaller than wave 2 at a smaller degree. They don't have you know, the size does matters, obviously, and you don't want this wave 2 to become super massive compared with the wave 2. So there is some time elements in there and some size elements, but don't be afraid to count a 1-2, 1-2 just because the wave 2 of a smaller degree, it's a little bit larger than wave 2 of a larger degree. All right, so that's the count on gold, and then here is what the bulls would like to see, that this is a complete correction, either to a WXY or an A, you know, or an A, B, this instead of an X, this is a B, and then a C wave decline. The reason why it's labeled XY is because this decline in here, although it looks impulsive, the internal structure of this is, it's a little bit tricky, and it doesn't count well as a full impulse. So the way I have it as a wave Y is a 1, 2, 3, 4, and 5 for wave A, up in B at 1807, then you finish off the decline in an ending diagonal, you know, to a zigzag in here, to a double zigzag in a wave 1, up in 2, 3, 4, and 5 for the wave C of Y of 4, and now you're beginning the wave 1 up. You're going to get a 3-wave setback back towards 1700 or so, and then you begin 3, 4, and 5, and you're trying to begin the next larger advance in gold, which, you know, at a larger degree of trend, you know, I have several counts, but they don't matter at the moment. But it would be that this 2075 high will get taken out in the next move. So very important in here. I think either this is wave C of a flat or wave 1 of a rally. Near term, we're probably going to get a bit of a pullback, and then we'll see how the market reacts. But for me, I still think that this is the interpretation that's going to pan out on gold. All right, let's take a look next in here. I'm going to take a look at the dollar. The dollar has a massive sell-off. It's been one of the largest in its history. Big weekly decline. We reached lows of 106.16. I've done videos for the past several months, you know, cautioning against the top on the dollar. You know, finally we had some magazine covers that started to confirm the top in there at near 115, and the dollar was not able to continue to rally. Everything kind of started to fall apart in here. And again, I have plenty of videos and comments on anticipating this decline in here. Now we're getting confirmation that this is probably a wave 5 top. We're going to have to wait just a little bit more, but I think, you know, we're doing pretty well in here with the decline, and we might have a major top in the dollar. I want to see what's going on with the RSI here being at about 45, 46 actually, and we're probably going to get a little bit of a pullback here, maybe in a fourth wave. And then a couple of declines, but I think then we're going to get a 3-wave setback, which will, you know, increase the RSI again, and then we're probably going to get the next decline lower. But, you know, you can see in here that we've dropped from 115 to 106, so pretty strong decline, and this helped obviously fuel the risk rally. It did not help Bitcoin much, but it did help the rest of the markets. Here is the monthly review of the count. In a 1, 2, so this is a primary. When you have two parentheses, that's a primary count instead of a circle. So 1, 2 primary, 1, 2, 3, 4, 5 intermediate degree, finishes wave 3 primary, goes down in an ABC towards the back of this trend line in a wave 4 primary, and finishes off in a wave 5. Beautiful channel, beautiful touch of these lines. This is what kind of gave us confidence that it's the top in the dollar is probably not far away. Euro has been rallying, yen has been rallying, so it's a pretty kind of coordinated move in this euro and this dollar weakness in here. But let's see what happens. If this is indeed a top, then we should have a major decline lower, at least back toward the bottom of this trend line, which can take, who knows, maybe several years. Within 2022, this could take place until 2025, 2026. So for the next 3-4 years, you could be in the bear market decline in the dollar. So that's kind of what we're watching at the moment. Here is the internal of that move. Basic wave 3-4 from 104.52 to 114.75. I'm not too happy with this move in here because it does look like a 3-wave move. And every time I see that, I'm thinking maybe it's a flat in progress in an A, B, down in C, and one more push higher. But I don't think that's the case. I think it's too much of an extended B wave to be considered as being part of a flat. You want those B waves to really not get above 127, 138%, maximum to 161, 161.8. But anything bigger than that, it starts to be problematic. So, looks like a decent decline in a possible 1, 2, 1, 2, 3, 4, and 5, 4, and 5. The targets would be towards 104.52, maybe even a little bit lower. And then we're probably going to get a recovery before the next decline lower begins. So we're in the final stages of this decline, but I think there's still a little bit more weakness to go. Now, if you can look even here, you can have a 1, 2, 3. So the dollar is probably going to spend a little bit of time doing a small fourth wave, followed by a fifth, and that's going to complete the decline. So, I think that's going to happen over the next couple of weeks in here. Now, the next slide, it's an interesting correlation, and everybody's, a lot of people are watching this Bitcoin to the Nasdaq. We all know that they're highly correlated for a long time in here, and we're starting to have issues with this, right? The Nasdaq is climbing; it trades at 11,800, and Bitcoin trades at 16,000. Yes, I had to check. That's exactly what Bitcoin trades. I don't know. I had in mind 17 to 18,000, but no, it trades about 16,800 at the moment. So complete divergence between what's happening in the Nasdaq, what's happening in Bitcoin, and who are we going to believe now, right? If history is any if any proof, Bitcoin usually started to sell off or started to rally way before Nasdaq did, and it hinted to a top, and I think I talked about this last week in the Macro Cafe, but it hinted to a top. I think about a month before or a few weeks before Nasdaq reached the top in here. Then also it hinted to a rally before Nasdaq actually started to rally higher. Nasdaq rallied quite strongly in here, and Bitcoin did not really believe it, and it just went sideways. So now Bitcoin is selling lower and Nasdaq is selling higher, and Bitcoin is like, I don't think so. I think there's still more weakness ahead. So I'm not discussing this Bitcoin count in here. I do it with my members every day in the room, and I've done a video on Bitcoin, I think, a couple of weeks ago. And I'm, I've done some counts on Twitter, so go ahead and check that out, or some comments on that. But we were expecting this decline, and based on this, I think Nasdaq, it's supposed to start selling off and kind of catching off with Bitcoin, and I think Bitcoin has got a little bit more room to go as well. So pay attention to this, because this is another indication that the Nasdaq and the equity markets are probably going to take another leg lower, right? This is the big question that we have right now. It's Bitcoin in let's say in a fifth wave, and it's ready to push back up higher and create a huge rally. For right now, the way it's acting very weak, and I don't know exactly where that power is going to come from to push it back above 21,000. Also, I wanted to show you a couple of charts that I have on Twitter for a little bit of fun. I posted this on November 7th. Solana will not escape. Elevator up, elevator down. CU at $12. This is, even before the drama with FTX started to unfold, I think, and because it was just a three-wave setback up there, and it looked like it doesn't have a lot of power to rally in any way. I know a lot of people were excited about this bullish moves in cryptos and in Binance and in Litecoin and a lot of other coins that started to push to the upside. You started to hear calls about the beginning of a new crypto bull market and altcoin bull market, but all of that fell apart pretty quickly. I even got some negative comments on Twitter regarding my comments that these are a bunch of kids just trying to get rich. With the next bull market in altcoin, and it's not going to be sustained, and I still don't think it is. I still think there is a little bit more pain ahead. So take for that what you may, but it's the reality of the market. I really don't make these rules. It's the way the counts are unfolding and the weakness in price. We might be in the final stages, but that final stage can still take, several months at least, if not even more than that. So anyway, Solana, my target was towards $12. Why did I choose that? Because once you broke this level, the next obvious zone of support was this prior fourth wave in here at about $12.30, and you can see that we've hit that with great accuracy here, $12.30. This is the low. If you look at this as a massive head and shoulder, it could suggest that Solana has a lot more to go to the downside, maybe back towards $5, maybe back towards $2, but I don't see how this thing can recover from here. Even if you're going to sell it, people are going to start to buy it back up, I think it's going to find resistance back towards this massive let's say zone of supply, and it's probably going to get knocked down again. So I'm not necessarily bullish in Solana, not by the way this price looks, no matter if this count can be counted as a 1, 2, 3, 4, and 5. Just because you can count 5 waves doesn't mean that you have them. This could be a very simple 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, and 5, and you can continue to crash. So the only way this becomes a 5-wave move if you're starting to break back above 35 in here and you're starting to have some kind of an impulsive events higher. But until then, this is a very dangerous market. I also caution against this BNB move higher into those trend lines. It acted sort of bullish, but imagine if things go wrong for some reason. What was the reason? The reason was that this was just a simple ABC move, and you always have to think when you see those moves from the lows against an ongoing downtrend that could be, just a trap, either a B wave or an X wave. And Solana, it's probably going to start selling lower. It sure did, and it was just an ABC up for an X wave. We're trading back towards 257.20 was the low of this B wave. If we're cracking below this, which I think we will, we're probably going to go and attack 183. We're going to go below this level, maybe towards $100 in Solana over the next several months, as this pattern continues to unfold in a big correction. The reason I chose to put an arithmetic chart versus, let's say, a logarithmic chart is just to kind of show you how much better you can see sometimes these 3-wave corrections and kind of how they look against this entire picture in here. So very simple 3-wave move, and I think that's what's gonna happen in Binance. Also, guys, I want to invite you before I finish off, 25% off Black Friday deal. That's $350 a year, $29 a month. Come and take a look at what we do in the Pro Room. We got a bunch of channels in there. We got a chat room, videos every single day, market updates, trades. You're probably going to be pretty happy if you join. If not, just give it a try for 2 weeks and see how you feel in there. And if you like, you stick around and take advantage of this deal. All right. Thank you, everybody, for watching. Again, our channel continues to grow. We passed 5,000 subscribers. I think people like what we do here and the counts and the explanations and the way we look at the markets. And I appreciate you all. As always, I will see you hopefully next week. Bye-bye.